Oh, we didn't even hit.
You're live.
It's live.
We just went without it.
We're going. Yeah. Well, kind of going out. Going at it without something like Rory and his wife.
Talk about a guy that's going to be focused on winning. Rory McIlroy.
Divorce in golf is an interesting situation.
Tell me more.
I mean, Tiger, he had to cut some weight once or twice maybe.
And he won after that.
And look at Rory. He just kind of unloads whatever baggage he's had in his life at this point for the last 7 or 8 years.
Yeah, let's normalize talking about divorce as a positive thing. How about that?
All right. You start.
Well, I've had divorce, and it was one of the best things that's ever happened to me. So
I mean, like, there's this sometimes we could talk all about. We've had people talking about marrying the rate, marrying the house, dating the rate.
Mhm.
Sometimes you got to just divorce a person,
a thing,
a friend,
a thought
hobby.
process.
Thought process is a big one.
Yeah, and it is painful. I'm not like making light of it. It's a difficult thing.
Well, yeah, I think we've talked plenty about pain, the pain of discipline, right?
Yeah.
Like you just, I guess, when you really get into it, there's things that kind of get swept to the side, right? Like, oh, divorce. Oh, yeah, like you just said. Oh, maybe it isn't a bad thing all the time. Maybe
it's not. Maybe it's a good thing. Maybe it's a rebirth.
It could drive up career earnings for him.
Could. Rory's about to come in.
Larger alimony check.
He's just focusing in, man. He's there for the golf. And then we don't know what their problems were, right? So,
we shouldn't mitigate all of that. However, I mean, maybe he wins a major soon.
Like next week.
He's going through, dividing everything out, going, what's the least common denominator here? Why I haven't won a major?
Well, have you seen the memes about him? Like now he's going to sign with Liv after he signs the papers and just get a Billy. It's all strategic. Anyways, what are we talking about today? We just went right into it.
Yeah, we
welcome everybody.
Nice cold open there. Adam, welcome back. I know you had speaking of like planning and changing some mindset stuff. You had a meeting last week, I believe you were at.
I did
learn about some things, go through some things about business change.
Yep.
And it's one thing that entrepreneurs are always doing, and I think we talk about professional athletes about it too, right? Like Rory, Tiger, Tom Brady, Drew Bledsoe. We talk about the Tom Brady roast, but it's always trying to get 1% better.
Be better. Yeah.
And Rory looks through, does a personal inventory, gets rid of it. But when you're doing a personal inventory on your assets, one of the biggest things to do is make sure that you have them insured appropriately, right?
Yes, insurance.
And we started off before we hopped on here talking about an article about how homeowners insurance is probably going to be a bigger issue than the NAR settlement in the real estate world in the next year, maybe two.
There was an awesome podcast on the Daily today that I've listened to almost all of it, but insurance right now is just a weird place. All markets are getting shook up. But the thing that's happening in the insurance world, I don't think people understand how deep of a base insurance is for the entire economy. So to zoom in really, really close, this article, and we've been talking about it in this office, in this industry, but talked about Florida specifically as a microcosm of what's happening across the country. And if you think about it, I mean, obviously Florida, I like to visit there. I couldn't imagine living there. You seem kind of like a Florida guy. Like,
I mean, only now that I've been on vacation on 30A, that's the only spot. The like the northwestern part, like not necessarily the Panhandle. Yeah. Now where all the real Florida top live.
Right.
But I mean, who doesn't like to do little bath salts?
I don't mind. Yeah, why not? Florida man, I love all that stuff. But what's interesting about there is that one, we shouldn't be living there, right? Like I love it. You shouldn't be living on the coast. Why? Because it might not be there tomorrow if a storm comes or the seas rise or whatever's happening.
I mean, like think about it. Like, so you have California on like the West Coast, right? There's only one side that you're dealing with, like storms off of the sea.
Sure.
Now you have Florida, where you have the Gulf, tons of warm water, El Nino.
Yeah.
Spanish for the Nino.
Yeah. The Nino.
And then you also have the east side of it, and it's if you look at it on a map, it's very narrow.
Right. And so what's happening there, just to get so when politics and free markets collide, we've seen that happen a lot, right?
Tell me more.
So we aren't going to get political, but here's what happens. So you look at Florida and then you look at the insurance companies and you think about them, and most people have a negative connotation. They think they're getting ripped off. You could have that opinion, whatever. But what happens is it's run like a business. So money comes in via premium, right? And then there's expenses that go out. So that would be, most people think claims, but there's also employees and paperwork and all kinds of stuff that go into this, what's called the combined ratio.
Actuaries.
Yeah. So what insurance companies try to do is obviously make money. So, but what's happening is the losses and the expenses are exceeding by far the premiums coming in. So then the only thing that they can do is raise premiums or pay less losses, or cut and get more efficient, right? So those are the three levers.
Or do both, which I think seems to be kind of a little bit of what's going on here, right?
Yes, absolutely. And if it gets too much more extreme, what people also don't really know is that, let's just take State Farm, for example, or Allstate or whoever. They underwrite the risk, right? So that, the Perrys buy a house in wherever, something island. Where do you guys go?
I don't even know what it's called.
Something Key, Siesta Key or something.
No, Rosemary Beach or something like that.
Sounds delicious. I hate rosemary, by the way. The flavor.
The flavor? I don't blame you. You don't put a little sprig of rosemary on your steak.
Right, or when they put it in a drink, I'm like, bleh.
So with rosemary.
Those fancy cocktail places that put the stuff in.
I do. I've been to one in Austin. I got kicked out of it.
So we don't underwrite. We don't keep all that risk. None of these companies, they don't keep it all, right? So they sell it to reinsurance companies. These companies are companies like Swiss Re. They exist in Europe or maybe the Bahamas. They buy the risk. And those contracts come up for renewal every so often. If they looked at that risk, AKA Florida or California, and said, you know what? The state is limiting what you can charge because they want to be fair. You can't make money there, so we don't want to buy your risk. If they stop buying that risk, the insurance companies will not write there.
And then what happens? Premiums go up, or we run into a spot where if you can't get insurance, you can't get other things like mortgages.
The real estate market, if that happens, if it were to happen, which I would hope they figure it out, right? All transactions real estate related would go away. Most people can't just go buy cash for a house in Florida, right? Almost all people. Some people can. But have you ever given a mortgage without requiring insurance? Never. Is that a thing?
Never. It's to the point where we run into people that want to get a mortgage and they want actual cash value insurance versus replacement cost coverage.
Yes.
We're talking about that a little bit. You want to elaborate on the obviously cost difference could be substantial, but risk difference is too much, right? So we do mortgages, same thing. Those things get collateralized, they get packaged up, sent to Wall Street, if you will.
Sure.
And then they're reinsured. And
so costs of everything are going up, right? So people are trying to whittle away at whatever the fees are. And they put insurance in that boat. And that's an okay thing to do. It's prudent to shop and get the best value and things like that. But here's what some companies and some agents are doing to you and your clients. They're putting coverages on called actual cash value. What does that mean, Tony?
The actual cash value, less depreciation, I'm going to guess, right?
Yeah. So when
if it's something breaks, you're cutting me a check. You're not cutting a contractor a check to fix it.
Right. Exactly. So most people think of insurance the right way, how it should be sold. If my roof is damaged, I want a brand new roof. There is a useful life of everything wearable in a house. So countertops, paint, and the roof itself. So in the Midwest, people put on roofs and they put years on them, right?
Yep.
I got a 20-year 3-tab, or I got a 30-year architectural. So in the Midwest, newsflash, those lifespans are not correct.
No.
So it gets super cold in the winter, super hot in the summer, and all that dries out and brittles the shingles. So I'm going to go out on a limb here and say a 30-year roof in the Midwest, you're lucky if you get 20 good years out of that.
I would agree. I mean, I've owned homes.
Yeah.
I've had you had it happen, right? You have hot. Not only do you have hot, you kind of talked about this, but you also have hot and humid, cold and dry.
Yes.
What's the underlayment of a roof of shingles? Wood.
Yeah.
A live species that expands and shrinks
and rots and does all that stuff,
especially when you introduce moisture into the equation.
So you got
hail too.
You got a home buyer, right? And in this scenario, that their debt to income ratio is tight, so they're looking for every single thing they can cut out to snake in and qualify for that Fannie Mae mortgage, right? So what they'll do is they'll say, all right, well, that insurance seems high. Let's get it lower. And they'll say, we'll insure for actual cash value. So that 20-year roof that you had, instead of getting a brand new 20-year roof, let's say it's $20,000 claim, that company that did that will say, all right, the new roof's 20 grand. We owe you for a new roof. But that roof's been on there for 15 years. So the actual cash value is the depreciated lifespan of it. It's got 5 livable years left. So we're going to give you $5,000 for that $20,000 roof. Ouch. Oh, wait, you have a deductible too. So we're going to take $2,000 out of that, and you're going to get a $3,000 check for your $20,000 roof. And you saved how much on the annual insurance?
20, maybe $150.
$150. So, I mean, we talk about make sure you get good advice. Like, these things are happening to people and they don't realize it. It's one thing if you understand the risk that you're taking, right?
Yeah.
If they're like, you know what, I'm cool with that risk. I got 20 grand in the bank. I'll save the $200 and my break even is like 30 years, but I like that risk.
Yeah, but that's the people doing that are that $20,000 risk isn't going to impact them. It's not going to impact their life, or it shouldn't. You know, oh, I'm buying this investment property or this fix and flip. I'm not worried about. I want cut rate insurance on it right now because it's not really worth much. It could be worth as much as just a hole in the ground.
Right.
But if you're talking about the average person that owns maybe 1, 2, or 3 homes, a $20,000 hit to keep a roof literally over your head, that'll break you. Because what happened? Like, let's talk about what happens after that, right?
Yeah.
So they call their insurance agent or who wrote that policy, who probably ships them off to the
claims department.
The claims to come. Yeah, who doesn't want to pay, who's already cut rate. They're allowing people to under or inappropriately insure.
Correct.
You think they're really going to want to help you out? Probably not.
Mm-mm. So what you play that out. So now you've got a $2,000 check or $3,000 check. You got a $20,000 job. You have 2 options. Either you just don't do the work, right? Which will be a problem eventually. Or you put it on
credit card.
And then that whole debt spiral things happen. And that's because of one decision that you made in the closing process among 100 decisions that saved you a little bit of money, but put you at a lot of risk, which is, just get good advice.
So, right, you talk about that, like a $20,000 roof, or I'm going to put it on a credit card, or I'm going to go to like One Main or one of these little corner store quick loan places for 20 grand. They're going to charge me 30% interest.
Yes.
20,000 times 30%, that's 6,000. So now all of a sudden that's a $26,000 problem.
Yeah, you got a $500.
And that's if you're paying it. That's if you're paying it in 12 months.
Right.
Like, a lot of these things are stretched out 4 or 5 years because that 30% interest is something tough to choke down.
Yeah, and this is going to become more and more of a thing because people think, like companies do. Florida's a separate entity, right? California is separate, but it does trickle through. Like it is affecting the Midwest.
Well, I think the goal of insurance, right, is to underwrite the risk or have a even premium, right? So you get the Midwest. You're dealing with tornadoes. You get Florida, you're dealing in the East Coast, you're dealing with hurricanes. The West Coast, a little bit of hurricane, a lot of fire, earthquakes. We did a loan just recently in Texas, and they required additional wind insurance in Texas. Texas.
Wind, hail, yeah. People don't realize that. So what insurance companies are becoming more and more afraid of it's not a tornado, right? Because a tornado is like a neighborhood. Right? Like it touches down and it goes. It's not, I'm not saying it's not a bad thing. It's terrible. But when a hailstorm, like last week, it came through, if you're watching this, check your roof, Tinley Park, Orland Park, like right along LaGrange and like 150, whatever. Yeah. So like you got like the whole southwestern suburban around the lake. You have a large inland body of water here. You get some strange storms. Some storms because the temperatures go up and down. So now you've got a hailstorm that hit that populated area. How many homes are in a 5 square mile radius there? I mean, couldn't even guess. Hundreds of thousands. I mean, 100,000? Like, no doubt. I mean, you figure, like, you get like parts of Tinley Park and you're right on top of it. Like, right. It's your lot line's right here. So now the companies have exposure there, right? State Farm is about 30% usually. So let's just say we had 30,000 claims in Orland Park. and the average roof is $25,000. Like, you can see where that math can get pretty exciting. So I say all that to say, like, hey, just get ready for a change in your home insurance. Newsflash, the premiums are going to go up. But what you should be doing is taking a really healthy understanding of what that actually is for you. It's a financial tool. So you need to call your agent. You need to figure out how much risk you want to put back on your company, or how much you want to retain, and then how that relates to your premium. Because, you got to look at basement coverage. You got to look, am I getting ACV? Do I have full replacement costs? Just have a real in-depth conversation, and then realize that when something happens, you need a bigger emergency fund, because having a higher deductible is helpful. I mean, there's things you can do to help, but it is coming, guys. The insurance premiums, just my guess, in the next 3 years, your home insurance premiums will be 40% higher than they are today. I'm going to go on record of saying that, right. Just a guess.
And they're all right. They've already crept up. I think when I bought my first house, I think my home, it was a smaller house, but I think my homeowner's insurance was $750 a year.
Yeah.
And now I have a way bigger house now, but it's still $1,300, $1,400, which I get, like, it's, when I look at it, I go, well, $1,300 a year, so $100 and change a month.
Yeah.
And I don't have to worry about if a hailstorm rips up my roof. I don't have to worry about if like bust up windows, all that other stuff. But I think, like, I look at it like that, and I own a lot of properties. I have a little bit of a savings fund, but I still go, well, let Adam deal with that problem when the time comes. Because I don't want the headache either.
Right.
Like, oh, I got to call this place to call this place to call this place to then get that small piddly check that isn't going to do squat, but probably piss me off even more.
And you got to really start thinking about putting claims in, because having claims now on your record is a lot more of a consequence, as insurance people call it a hard market. It just means things are getting tighter. So insurance companies are losing money. So they're trying to get people that are a better risk to insure. And if you've got a $1,500 claim for a ceiling stain, you're probably going to pay double, and you could have just retained that risk. So, and people, well, what am I paying insurance for? Here's what you're paying for. You're paying it for that catastrophic situation that you aren't able to cover out of your emergency fund. That is when you put a claim in. You don't put a claim in because hail dinged your gutter. Like, that's just not a smart thing to do. But people don't really understand what it is. They think it's a maintenance policy. It is not.
Well, let's talk because I think some people kind of get roped into that too. You have these ambulance chaser type people that are storm chasers that come around. Oh, hey, we'll get this out of your insurance company. Those people aren't employed. Like, they're not real adjusters, right? I mean, they're
making money.
A middleman to do something that you could probably just call your agent and work through.
Yeah. I mean, there's scams everywhere, right? And that's a big one. I'm sure that there's tons of door knockers and hangers.
Well, I see signs all the time. Hey, need a roof? Call this number. We'll figure out a way to show that there was hail here.
Yeah, and that's great, but they're really good at detecting fraud now. So just be careful with the guys that knock on your door. Call a local person. I mean, call your agent. Get somebody that's knowledgeable, that is going to be around. If you look up this company, and here's what's scary: they come up with these contracts, and people sign them without reading them, and then buried deep down in those contracts, it says, if you do not use us for your roof, you must pay us X dollars. And it's significant. Really? And these contracts, if you get a good lawyer, you could probably wiggle out, but they're pretty binding. So just don't sign anything.
I mean, a good lawyer is going to cost you $300 an
hour. Just don't sign stuff, and be protective of your the elder people in our community get burnt a lot on that. So just make sure you're checking in on people that you care about, and they're not signing crazy door knocker roof scams.
Hey, we're looking at our binoculars, and we're talking to Sabrina earlier about some roof issues. Like, everyone wants to talk about, hey, we got this plan, we got this thing, we got this thing. Oh, well, guess what? Sometimes you miss how many layers of shingles are on a roof.
Right.
And then that was a professional kind of just glossed over that too. You always dig in a little bit further.
Sure.
This is a house. Like, this is something you spend 100, 200, 300, 400, 500, 600.
Yeah.
What? Like, talk like I'm the rock here. How many beers are we going to drink? You were talking earlier too, Adam, about like AI and like Google imagery and satellite. So insurance companies now are looking at your roof to see if you have problems, had some shoddy work there. And that's one of the ways that they're going to either prevent paying claims or slow paying claims as well, right?
Yeah, they're gonna use it to make sure that they're insuring a house that they're matching the risk to it. So they're taking satellite images of roofs and saying, all right, whatever AI they're using, this roof looks like it's got a little issue here. Why don't we get this checked out? So there's always a human eye that goes onto it. But what they're doing is just not letting insurance be a maintenance policy. You have to replace your roof, people. It doesn't last forever. So make sure that you're healthy financially, because now you're going to get called out. And it's all the companies are doing it. So they're going to say, hey, and a new company will not insure a roof that is bad, because it's just a matter of time before a windstorm comes and rips that off, and then the insurance company's paying for your new roof.
Yeah, I'm gonna get like roofs are probably the number one homeowners insurance claim, I would guess.
Oh, by far. It's roofs and or basement flooding, right? Because you got to buy that separate. Make sure that if you have a basement and it's finished, you got that coverage on there. But yeah, it's just really going to force us to be honest with ourselves about maintaining our homes. And if you're doing that, you're going to be fine. If you're hoping that a hailstorm comes before you get that new roof, Sabrina,
hope is not a business plan. I think we've learned that a few times over. Hope is not an adequate business plan.
They're going to catch you with your bad roof, and they're going to say, hey, look, if you want to continue business with us, you have to do this to your roof. And don't be surprised if you start getting letters like that and you gotta pony up a couple bucks.
I think it's, as you're like, and if you're a home buyer entering the market and you're looking at this and you're going, well, this house is priced low, but look at the roof.
Right.
It's beat up. Well, what is that roof going to cost you longer term? Either higher insurance premiums.
Yeah.
Which then now your payment goes up, and the payment's not going up because the interest rate's different. It's because homeowners insurance costs more.
Yeah.
Well, it's because they know that roof has a higher likelihood of failing in the next 2, 5, 7, whatever amount of years it is.
And be careful on those real estate contracts, because you might say, oh, it's priced in. That house was $260, but we got it for $240 because it needs a new roof. Hey, newsflash, you may not be able to get insurance to even buy the house until that roof's done. So these contracts might have to start to get a little more. And
pricing in, it's bullshit.
Yeah.
Like, quite honestly, it's priced in. Well, you don't know how much a roof is going to cost.
Right.
You don't know what other problems there are under there. Is it just shingles or is it decking, right?
Right.
So, is it priced in? No, what it is, it's a seller that's just trying to get out from a house, and they either didn't have the funds to fix it. And so, again, if you're buying it knowing full well what it's going to cost, right? You work with a home inspector, you work with a contractor, and you go in, sure, then it's priced in. If you're just going with a lazy real estate agent who just says, hey, it's priced in. Yeah, we just knocked 20 grand off because it looks like it needs a new roof.
Yeah. I mean, that contract scenario now I don't know if this is even possible, but it probably should look like, all right, we're knocking 20 grand off. No, keep the 20 grand on there. But before I close, you gotta use that 20 grand to buy the new roof, because a lot of people don't have 20 grand just laying around.
So perfect example, closing a transaction tomorrow. People wrote the contract, get the home inspection back. Roof has some soft spots in it, likely needs a full tear off, right? Attorneys go through all of the negotiation. Buyer and seller come to an agreement on a $19,000 price reduction.
Okay.
Why is it a $19,000 price reduction? Well, we can't get a bunch of seller closing cost credits because we're capped. You only have so many closing costs, right? They determined, right, they had a real contractor go out there and review it, go, this is what needs to be done, 19 grand. These people are buying this house. They're going to be eventually selling another home, and they have the financial capacity for that it being priced in, right?
Sure.
But it wasn't even priced in at that point. They were paying regular retail price, full boat, and then they had to negotiate that. That's why having a good home inspector is a very important piece of the puzzle. Your real estate agents, the agents that we have on this show, they have some of the best. Adam, I'm sure you guys, your office probably partners with some really great ones too.
Mm-hmm. I mean, every single piece of that transaction, if there's one weak link, and some, not to say people don't mess up, right? Like, everyone messes up, but as long as you got people that are around you and they do their job right, you're going to have less risk in that transaction. Like, they're going to catch the 3 layers on your roof, or, hey, like there's mold in the attic. You know, all those things that people should find. That
or hey, you didn't win a major in a while. You know what? Sometimes you just got to do that full-on inventory and get rid of the problem people. And don't be afraid. Like, you know, Rory, public figure, right? Getting rid of problem people, getting rid of problems, and maybe it results in some more earnings for them.
For sure.
What else we got? You guys got a pretty big event coming up here.
Yeah, man. Friday. It's going to be awesome.
This Friday,
4 to 7 or something. What's it called, Sabrina? Spring fever.
I got a fever.
I got a fever.
You got
no one prescription. I made that joke and no one got it in my office. I'm like old.
I might need I got a burn. I'm a burn victim here.
We're getting to the point.
How's your insurance policy?
It's pretty good. You can sue me. Yeah, we're getting to the point where I make movie references in my office and they're not even laughing. Like, or SNL stuff, you know?
That's it's a shame.
It's terrible. But that event's gonna be cool. It's gonna be a bunch of home services, booths. There's $3,000 in giveaways. We're gonna have food. I mean, just bring your kids out. It'll be fun either way.
So that's 4 to 7?
4 to 7 at the St. John location, 9465 Joliet Street, right across from Dairy Queen, and loads of fun laundry. Mama D's Pizza.
Ooh, Mama D's Pizza.
Mama D's, we should.
Ask about cooking a little extra, you know, a little extra little char on there.
They do a good job over there. What do you got?
That's about all I got on everything. What do we got this weekend? Probably come by you guys on Friday. Try to locate my boat. You know, constant battle every year. Hey, you put this on the pickup date. Oh yeah, you're 3 weeks out. So.
Yeah, we're gonna get you. Your boat's buried back.
Yeah, forget about it. Don't worry about it. Again, something we could maybe talk about in another episode is the appropriate level of insurance for your toys.
Yeah, we could even do some cash value life insurance next time. We can do some cool stuff.
All right, we'll dive into it deep. Other than that, that's all we got. We had great. Well, I guess we could talk real quick. We did have really, really great news on CPI this morning. Inflation coming down, interest rates slowly creeping down. Again, I told you guys this way. I think we had Nick Osting on. We were talking the Kentucky Derby show. We were talking about the balance sheet runoff and quantitative tightening, which was what the Federal Reserve was doing. That's stopping quantitative tightening or the balance sheet runoff or roll off, however you want to call it, is way more important than the Fed cutting the Fed funds rate for mortgage interest rates.
Interesting.
Yeah, there's a lot that goes on to it. Maybe we'll talk about actual, you know, cash value life insurance, all that fun stuff. We could also talk about the balance sheet of the Federal Reserve and how they pumped in a bunch of, you know, buying mortgage-backed securities, artificially drove interest rates down. They pulled out of it, just like people pulling out of insurance in particular states, and all of a sudden the prices go up. Wouldn't you know?
Wouldn't you know?
Bidenomics, baby.
Oh,
we better get out of here before we get shot.
Right.
Anything else? Guys. That's it.
Holler.
You guys know how to reach us.
Talk to you next week.